Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. I got a whole bunch of good news stuff for you today, and we're going to start it off with massive Twitter hack made Target promote Bitcoin scam. So another Twitter hack. A group of unknown hackers just achieved a major win today after attacking Target's Twitter account to promote a Bitcoin giveaway scam. So the now deleted tweet is now on display after Ernst Mulders, a software developer at eVec, discovered the major retailer's thread. The hack apparently struck multiple accounts, including Toledo Athletics, the Body Shop AHDB, and the United Nations High Commissioner for Refugees in Serbia, which is like the most random Twitter account I've ever heard, I think. So, as you can see, everyone's just, now I can pay for my purchases using Bitcoin. All right, Target. All right. I sent 2.2 BTC and received 2 back from the AHDB. Oh, cool. So many of these Twitter accounts were used as sock puppets to reply to Target's announcement of its grand giveaway of 30 million in BTC, making the scam look legitimate. So far, there are very little details about how the hacking incident took place, but it appears to follow a pattern of either long-term social engineering or a flaw in Twitter's own security. One of the two. So look at the destination address for the scam. Reveals that the hackers managed to swindle a total of 5.8 Bitcoin, 37,000, from people at press time. CryptoVest attempted to visit the scam site, but it is actively rejecting connections to its server now. So no more. Let's see if we can get the Twitter pic here. It'll be taken down. Here we go. We're giving away 5,000 Bitcoin to all community. We present cryptocurrency payments for your purchases in our store and want to celebrate this event with all users. We organized the biggest crypto giveaway in the world. And it's just send 0.2 BTC, 2 to 2 BTC, and then get 2 to 40 back. All right. That sounds like a great deal. That's always a good deal. Moving on to the next one. Is it a significant Ethereum balance moved to Binance to await action? So this is kind of interesting. Several large tranches of Ethereum have gone into a known Binance wallet from previously unknown addresses. The transfers are yet to make significant whale moves, and the intention behind the transfers is unknown. So close to $45,000 Ethereum, so about 9.3 million, has been moved to Binance in the last 2 hours. About a third of Binance's total Ethereum volume in the last 24 hours. So expect some volatility. So Binance is one of the best visited exchanges, and it sees significant activity given the ability to use the large Ethereum balance to move various assets. The amount of Ethereum transferred surpasses the 24-hour Ethereum volume on Binance, suggested the transactions could have a significant effect on volatility. Ethereum pairs on Binance have relatively low activity, but there are plenty of tokens that could see pumps. The entire balance of Binance wallet has reached more than 299,000 Ethereum, which makes the 45,000 token transfer pretty significant. So one theory is that this is an attempt to exchange the Ethereum from an anonymous coin. Binance, one possible spot to allocate Ethereum would be the XEM Ethereum pair. NEM is revving up now after CoinCheck trading resumed, and the coin is pushing off from recent lows. So XEM continued to pick up this Tuesday as speculation has raised both volumes and upward bidding. So kind of interesting. We'll have to see if there's going to be like a massive whale sell-off or anything like that from that. But time will tell. So far, everything is just kind of going down overall. We'll get to that in just a moment. So the final article here, is it better to trade crypto or hodl it? So the hodl approach relies on 2 main ingredients to be successful: an upward trending bull market, and 2, a relatively long-term future prospect for the asset. Bitcoin and many other cryptos have enjoyed both of these factors for the better part of a year. Well, no, except not really, not this year. However, as of 2018, the overall market has been rapid reversal to those trends. This means that those who haven't actively traded during this period have actually made far less than those who have. The reason for this is simple. While hodlers make profits on overall upward trend of a cryptocurrency, traders profit on those save movements and price dips as well. For example, see the 14-month Bitcoin price chart shown here. So a hodler who entered the market on January 1st, 2017, has seen a net return of about 7 to 800% as of July 2017. Now, a trader who entered the market on the same date had the potential to make a net return of 3,300% by trading at the 6 peaks in the December to February period. If the trader had timed his sells and buys correctly in just 6 sells at the peaks and 6 rebuys in the dips, they would have made about 4 times the profits of the hodler. This is what traders refer to as taking profits and buying dips. In the case, the hodler who held through the 24th period saw a net return of about $600 to $700. So this is just a single day of Bitcoin price charts, just sort of cherry picked here, or about 9.7%. So $700 if you had a Bitcoin. A trader, on the other hand, who sold at all 6 peaks of this day and bought back in the dips in between would have made a net return of $2,500 or 34%. Now, of course, it's going to be very difficult to get every single one of those dips at the top and at the bottom. So that's a bit of a stretch in terms of optimism. So these two examples demonstrate the added value of trading versus hodling, though both are profitable. Trading, if done properly, will deliver much better ROI, even in a single day. Additionally, if you were to trade every day over an extended period, these profits are compounded and returns can be phenomenal in comparison to simply hodling a coin. In essence, while hodlers are waiting for the coin to grow on a longer-term basis, traders are using the volatility to maximize returns the whole way up. So that being said, the average investor in the cryptocurrency space should not attempt to trade actively unless they are willing to endure a huge learning curve and take heavy losses. Professional traders like those writing and providing market analysis on Coinbase have spent years honing their strategies and sharpening their skills, and the average investor is not able to separate themselves from their investments, and emotions in trading are like emotions on a poker table. They cause bad decisions. What you often find is investors attempting to trade think it is much easier than traders get credit for. Some traders spend years in business school, followed by years working their way up through brokerages, learning the ropes. Unfortunately, in cryptocurrency, the recent bull market has caused many investors to question the need of such seasoned veterans, and will change, of course, as 2018 takes it all from them. Another thing about day trading too is that not everybody can do it just because it takes a lot of effort. You can go to sleep, and in the middle of the night, if you're in the Americas anyway, you go to sleep, and a lot of times there's a big dip, 3, 4 in the morning, 2 in the morning sometimes, just really early in the morning, and you go to sleep and you miss those. Like, you have to sleep at some point. You wake up and you realize that you could have bought in at a much lower price than you bought in at just before you went to sleep. Maybe your limit order didn't sell, or maybe you set a limit buy that didn't quite reach that bottom, that and you just didn't get that bottom. Another thing too is again, it's saying here that it's a lot easier said than done, and that's true. Your emotions get in the way. I would say the biggest thing about day trading is impatience. I like to say to myself that whenever I go to make a trade, wait 5, 10, 20 more minutes, and then make the trade. Because oftentimes I'm like, okay, well, it's going down, I'm going to buy now, and then you go to buy, and then it just keeps going down a little bit more. Whether it's just a little bit more or a lot of bit more, it keeps going down on you. So if I would have just waited 5 or 10 minutes, I would have gotten a much better deal. The same thing with selling too. It's going up, volume's cutting down, it's starting to go, and then I sell, and then it's like, whoop, oh, I was going back up. So if I waited 20 minutes, I would have seen that, and I would have gotten a much better deal on selling. So I think that's something that you should follow as well, is if you're having a problem with impatience, have a timer, a cooking timer if you need, and you're like, okay, I want to make this deal right now, I think I need to buy right now, and then set that timer for 10 minutes and wait that full 10 minutes to then make your trade. I find it more often than not actually makes you more money doing that. Just wait a little bit. Sometimes you'll see a situation where you're like, well, I shouldn't have bought it all right now. Maybe I'll just wait even longer. So day trading is for people who really have the time to do it, and honestly, a lot of money to do it. Now, day trading for people that just put $100 or $1,000 into crypto, that's not a problem either. Because if you put $100 in just to learn, and you come out the day with $101, congratulations, you made 1%. You were successful today. But the person who put $1 million into crypto, they didn't make just $1. They made $10,000 that day. Something like that. So there is a big difference between people who already have money and people that don't really have money. They're gonna succeed way more than you, and it just takes a lot of time as well. You really need to sit in front of the computer for many hours watching charts go up and down. But everybody has their own strategy, so. But trading definitely makes you way more money, but oftentimes hodling is just a lot easier. But moving on to coin market cap here, we're at 209 billion market cap. We are going down, down, down. So definitely no bull run yet. Maybe we're just going down to the bottom to get that bull run started towards the end of the year. But that's what I'm hoping, keeping that positivity out there. You know, Bitcoin dominance still at 52%. Really nothing to check. The winner of the day, Nexo, Chainlink, Maker, loser of the day, Eternal Token, and a bunch of other nonsense. So we got one chain on there, but nothing too crazy. But I hope you guys enjoyed this episode, and as usual, I will see you guys next time.